Hi guys, thank you for joining. We are just about to get started. I can see Neil's already here. So Neil, welcome to my first Twitter Spaces, X Spaces.
Hi Rahul, how are you doing?
And hi Neil, hi. And Pankaj has also joined in. So Pankaj is stuck in traffic in BKC. So he's joined us from the car, and soon he'll be headed to office. So we may lose him for a few.
Been there, done
So
that.
Pankaj, welcome. Yeah. I just want to let everyone know that I'm co-hosting this with Prince. I don't know how many of you are aware, but Prince has this amazing Twitter handle, X handle, where he's been conducting all these wonderful webinars on how to pick stocks in various sectors and getting all market gurus. So, it's an honor and a pleasure. So, Prince, thank you for helping out with this.
Thank you so much for your kind words, sir.
Hi Prince, how are you doing?
Wonderful, great.
Hey, all good.
It looks like a small community here. You all know each other. Okay. Where do we start? I think to help kind of lay the groundwork for this discussion, uh, of course, in the last few weeks, all of us have posted multiple times explaining what's been happening and how valuations have run up. And then, if I'm not mistaken, on 18th of August, Pankaj was on TV to explain why people should be a little cautious about valuations, and we'll ask him to revisit those data points today just to kind of reinforce. But ironically, what has happened since the day he went on TV is that the small cap index has run up very sharply, the mid cap a little less sharply, and the Sensex, a little more or less sharply. Basically saying that caution is unwarranted and mid caps and small caps are the place to be. So, it's like the market has snubbed that opinion, if you will. Uh, so, we'll talk about all that today. But Neil, I want you to, if you can, please kick this off because you have a unique insight in the sense you get to meet a lot of people. You're meeting the gurus, you're meeting the investors, you're writing, and your team is writing all these wonderful stories. Give us an insight. How are people reading in real life when you're interacting with them this small cap and the mid cap surge?
So Rahul, there's an insane level of FOMO. Every meeting that I've been to in the past, I would say almost 6 months, every Twitter spaces I've participated in, small cap is the dominant theme. And that itself is a sign that things are getting bubbly. And I hear this from the fund managers also, like, that's all the questions that they are getting. Um, so very interested to hear what Pankaj has to say on this subject.
Yeah, so basically, you're reinforcing the point about uh, that there is a extreme level of interest, and Warren Buffett says that you want to be greedy when others are fearful, and fearful when others are greedy. But here you are being, you want to be greedier than the other person, right? The FOMO effect, if you will. You don't want to lose out on whatever is left of the rally. So,
So
Pankaj, yeah, Neil, go ahead. We'll get Pankaj after
just
that. Yeah,
one
go ahead.
one last point to add. So when I talk about valuations and the surge in flows, etc., a lot of the time
Mhm.
people come back with, no, but we are ready to invest for the next 10 to 15 years. So kya hi farak padta hai, even if the next 3 4 years there's no return. At least that is what they convince themselves. Ki yes, they can stay put.
Yeah,
And to
yeah.
that it's very difficult to come up with an answer, because if you look at 10 15 year periods,
Mhm.
small caps have done extremely well. But what is harder to predict is how a person would react if there are 1 2 3 4 years of no return, and your neighbor is busy parading their index fund or their large cap fund and garnering lots of return. So that's the
Yeah,
interesting behavioral question that comes out.
yeah. Pankaj, field's open for you to caution us a little bit more or egg us on a little bit more.
Yeah, thanks, Rahul. You had a very interesting comment to make from 18th of August. And I wish I knew the tops and the bottoms. Also, I still remember 2017, very fresh in my memory. From July, August onwards, actually, I became very cautious, and the euphoria continued till January 2018 for 5 6 months, and the bubble became bigger and bigger. But what I was convinced was that finally, whenever this breaks down, because the length may not be known, but it will be a bad one because the kind of stocks which had started to move up. Obviously, nobody knew the timing then. What I am trying to do in my fiduciary responsibility is that excesses are getting created in many segments. And when I look at the indicators, many of those indicators are suggesting that this space uh, is kind of a little, one needs to be a little careful in this space. Uh, because if you guys remember 2018-19, the reason was known on the hindsight, uh, but data points were pointing towards that. And on the similar breath, and it's on public records, when in March 2020, April 2020, we went and said that this may be the start of the new bull run, people, were on the opposite side. So clearly, data points are very important. It may be with a lag, but generally they don't tend to, kind of lie. And today, when I look at the data points across this space, clearly greed is visible across the board. And let me take you a few of the data points which are pointing towards that. The first one is that when you look at a earnings yield of profitable companies across all the three, four indices, which is large cap, mid, small, micro, uh, what is interesting is that most of them are trading at similar earnings yield. And for most of the viewers, earnings yield is nothing but reciprocal of 1 by P or reciprocal of P, 1 by P. So clearly, if a large cap, mid cap, small cap are at the same earnings yield on a trailing basis on profitable companies, why to take that additional risk if you are not getting that margin of safety? That's one thing to note. The second point is that when you look at the market cap distribution today, the market cap distribution is almost 30-21% on mid and small caps as a percentage of float market cap universe. And the profit distribution is around 25%. And top 100 companies of India constitute 75% of profits. And now their market cap distribution is below 17%. So somewhere some disconnect is right now clearly visible, and that one needs to be careful about. Third, when I look at the earnings yield minus bond yield of mid and small, they are, at a worse situation than 2005-6. So clearly people are willing to, pay far more for mid and small caps and compared to bonds also. So one needs to be a little worried on that side. Fourth, I think when I look at the kind of quality or the names of the companies which are going across the board, I get a little worried because narratives have taken over the reality. And in many places, when I look at the cash flows, I'm getting a little worried that many companies have not generated operating cash flows for last many years. And cash flow is one where I believe top line is vanity, bottom line is sanity, but cash in bank is reality. Finally, balance sheets and cash flows should not be ignored. But the current mood of the market is to focus on P&L rather than balance sheet and cash flows. So that is another point, kind of to think about. And last but not the least, one of the sell side guys does this value 100 indicator, which is Ambit. And they do this interesting stuff for last many years, where they look at the exchange volumes. And the thought is that during times of greed, everybody wants to own mid, small, micro. And during times of fear, everybody wants to hide in the top 100 stocks, which is large cap. Normally, when you look at 100 rupees traded on the exchange, during times of fear, this number of 100 rupees normally has 75-80 rupees traded in large caps. And during times of greed like this, only 45 rupees is traded in large caps, the rest 55 rupees is traded in mid, small, micro. So I think going by history, Today we are at the extreme levels of greed, where the index is somewhere about 45, 46. And generally, the experience has been that when you invest during times of greed, the next 12 to 18 months tends to be inferior. However, the liquidity flow has been very strong. In the last 6 months, about 30,000 crores worth of flows have happened in mid and small cap funds. 1.9 million folios have been opened in small cap funds. Uh, and zero point 0.8 million got opened, if I remember correctly, in the month of July itself. So clearly, people are looking at past returns and feeling that this is the way to financial nirvana. Uh, the returns on 3, 5, 10, everything is looking so good that investors are getting carried away looking at the rear view mirror. But we all know that medium to long term, this category creates wealth because these are most domestic centric businesses. And if India does well, this medium term will do well. But what one needs to be aware about, there are periods of sharp drawdowns also during this phase. In the last decade, the return is looking good. But how many of you remember 2018-19 bear market in the mid and small caps? It was very, very difficult to go through that till March 20, if you guys remember. So there will be frequent drawdowns as well, where the excesses will be wiped off. So anybody who is entering the space, my only word of caution should be that mentally you should be prepared that there could be periods of sharp and severe drawdowns. And if you can sustain that, obviously this category is really rewarding. So that's the broad thought which I have from a data perspective. And being a practitioner in this space for last 2 decades, I have seen cycles, I have made my own share of mistakes. And probably we can take in the later stage that what are the mistakes one should avoid in this momentum market. Over to you, Rahul.
Yeah. So, like they say, right, history does not repeat, right? It rhymes. So, it may not play out perfectly this time, every metric, but the fact is that there are multiple indicators which are signaling that we are in super greed zone. And I think you made wonderful, wonderful points. And that indicator you spoke about is so simple and it can be so powerful, right? How the trading shifts in times of greed and fear, and you can actually plot that. And like you say, it's at 45 right now, which is like peak greed territory, if you will. So the question that comes to mind after I heard you is that even on the 18th of August, to be honest, it's very convincing that we are in a overextended territory, right? Now, typically in overextended territory, a person who's already bought small caps quite some time back, you can tell him, you ignore the drawdowns. Drawdowns are common in stocks. I think the bigger problem is with this new rushing money that is rushing in. You gave the stats of the number of folios being opened. I had posted how the money in small cap funds had spiked, I think, in June, July. I think a lot of these guys are new guys who've come into the market. Like Neil said, there's a FOMO at play. And these guys are going to lose money at some stage. They could make money, but at these valuations, from such a high level, to make a meaningful rate of return over the next 5, 10 years, it's going to be very difficult. So, is this yet another case of the next batch of investors, new investors, burning their hands, and therefore ultimately they move out, and India remains, a community which has, a tiny allocation to stocks because this just keeps on happening every few years.
You want Neil to answer this?
Yeah,
Neil, you
yeah,
want
yeah,
to take
Pankaj, yeah,
this?
if you have, yeah, yes, yes.
Okay. No, so my sense is I think it's a slightly far-fetched conclusion. You're seeing cycles playing out. And
Mhm.
one thing I think investors have matured. I'm completely seeing that maturity coming in. And if a COVID-like situation has not ruffled people, and don't forget that people came in 2017 also, right? During that phase, and for 2 years they didn't see any returns properly. They saw drawdowns. and finally you saw the Agni Pariksha, which was COVID. If that has not ruffled people, I think we have come a long way. So from a medium to long term,
Fair
I'm
point.
not really concerned that drawdowns, there will be set of investors who will get worried, who are joining the party looking at their neighbors, or any social party they feel left out, so they also want to be a part of the party. So they may move out because temperamentally they may not be in the right space because they may be thinking this is the space to make easy money. So they get flushed
Hmm.
out. But by and large, I don't think
Hmm.
from a medium to long term, I think India has come a long way from an investor community perspective. So I don't think that should be an issue.
Fair point. Fair point. To this, I just want to add one thing, and then we'll ask Prince. I don't know whether you are able to ask a question or you're also traveling. But if you want to, after this, you could ask, and then we'll get Neil and Pankaj more in. So, Pankaj, the only point I want to add to this is, I think Warren Buffett or Munger, one of them said it, that if you buy into a very good company at, you know, at a high valuation, over a long period of time, that good company will make up for the sin you committed. But if you bought into a shady company or a poor company or a company without cash flows and no business plan, etc., there you're going to go to zero, and that's going to hurt a lot. So I guess it goes back to a fund manager like yourselves. You guys got tens of thousands of crores riding on small caps, mid caps, and like you said, cash is reality. That's what you're focusing on. So tell us two things. One, you're obviously finding fewer stocks today than what you were finding before. I think that's an obvious thing. So what are you doing with cash you're not able to deploy? And how do you plan to deal with it if the money continues to rush into your funds?
So Rahul, I think at every point in time in market there are few opportunities. And today there are opportunities across uh, areas. But my focus today is twofold. One, don't worry about upside right now. Worry about where you could see downside in your portfolio. And I think this is the time to be absolutely clear on risk management. Uh, Normally, I think everybody is so focused on stock picking that portfolio construction is ignored. And if you ask me as a practitioner, I think stock picking is overrated, portfolio construction is underrated. And
Bang
I
on,
think,
bang on.
and I think over a period of time, if you had construct a portfolios which can sustain drawdowns, which will happen from time to time, and make less mistakes, you will survive for a longer period of time. And market is all about survival, in my view. And mid and small cap, the mortality rate is so high because only 10-12% of mid caps, small caps convert into large caps, right? A large of them slip, right? So you need to be extra careful that you will make mistakes, but the mistakes should not be large enough to lead to a permanent loss of capital. You most of you would remember 2006 to 8 cycle. That was on steroids, right? Nobody thought what could bring that down. People are having a great party. But look at the number of stocks which are after 10, 15 years. Penny stocks are not tradable stocks. Okay. And the mistakes which you did in that cycle actually hurt you all throughout for the next 3, 5 years. Similarly, in 17, whatever mistakes you made, it hurt you until 2, 3 years. So it's okay to live a little upside right now. Uh, don't worry about that, but make sure that the portfolio is, strong enough to weather any drawdowns. And I personally believe that uh, you will fall, but if you fall less and protect the capital, that is also a source of alpha generation. And the less you fall, the better the alpha for a longer period of time.
Yeah, the less hurt you get, the faster you will get up and the faster you'll run, I guess.
Absolutely, absolutely.
Yeah. Okay. Prince, you wanted to ask a question.
Yeah, thanks, Rahul. Hi, Pankaj. So Pankaj, within the fraternity, those people who have considerable experience in the market, they are also bringing cash to the table, right? And they are optimistically cautious. They do not want to miss the bus, but again, they are treading slowly and gradually. So my question would be around the PSU and defense space. So Pankaj, do you see these spaces? Obviously, they have done well, and people are also gung ho at this point in time. So, any broad view at this point in time, are valuation by any means comfortable, or maybe what sense you have on those sectors?
So from a sector perspective, a lot of work is happening at the ground level. There's no denial of the fact. And I think you are seeing real change when you travel to, uh, ground, meet companies, entrepreneurs across the value chain. The kind of optimism you are seeing this time flowing around the value chain, you probably have not seen. And rightly so, because a lot of orders, bookings, export opportunity, which is opening up. But as I said, you have to select right companies and from a bottom up perspective, and making sure that you don't get carried away in the narrative and compromise on quality. The worst thing you can do is go down the quality curve during this phase. And my sense is that looking at the working capital of these companies across, looking at the cash flow conversion of these companies, whether the balance sheet is strong enough to handle that volatility, I think will make a lot of difference. Many companies, in my view, are very strong companies, good companies, but valuation, I think, is also to be kept in mind and not getting carried away by only by narratives. In many cases, I feel that companies are good, but they are already discounting. Forget about 26 and 27 as well. You know, and we have seen in the past how euphoric can it be. We saw that in NBFCs, we saw that in chemical stocks just 2 years back, and then a lot of these names, which are still good names, went through a period of consolidation and stagnation, where as investors you didn't make any money or you didn't participate in the rally. So just be careful about that. From a reality perspective, things are changing, and things are changing for good.
Thanks.
Great.
Over to you, Rahul.
Yep. Pankaj, I don't want to put you on the spot, but is there any one or two sectors where you believe, in general, valuations have gone to an extreme? Now, I understand you're a bottom up, you're focused on stocks, but from a sector perspective, where people should exercise even more caution. And also the flip side, sectors which are completely ignored and, or rather, relatively ignored, and people should look at.
See, rather than sectors, Rahul, what I would suggest is that we buy stock on a bottom up basis, right? Everybody, right? They
Hmm.
invest in
Okay,
stocks.
fair point.
So let me talk about three or four things which people should avoid uh, from past experiences, mistakes, whatever you can say. One, please be careful about companies which have stretched working capital from a business perspective. Seldom high working capital businesses create value over longer periods of time. During times of like these, people tend to ignore this very basic thing of looking at working capital. And many companies I am seeing, which are coming for IPO or are listed, they are managing working capital by extending the payable cycle. You know, so debtors are deteriorating, inventory is deteriorating, but they are showing the same working capital cycle by managing payables. So be careful and just do some detailed work on that side. I think that's very, very important. The second one is that please ask yourself and evaluate that is this business going to generate return on capital, which will be higher than cost of equity for sustainable periods of time. A lot of companies which I am seeing are rallying have not generated return of capital for the last 7, 8, 9 years. Maybe single digits they have generated. Uh, if they can't, and it's just for 1 or 2 years, then trust me that they probably will not generate well but destroy well. because to cater to that growth which is coming, if the business accruals are not there, you need to borrow or dilute at every point of time. So be careful on the sustainable return on capital of the businesses which are there. Third, please look at the operating cash flow. I'm not saying you should be obsessed with free cash flow, but at least the basic hygiene of the business is operating cash flow and the conversion ratios. And fourth, please don't just go by narratives. Look at the past pedigree of management teams, promoters. And I have always believed that leopards don't change their spot. Uh, and the promoters have made mistakes and not been, right to the, shareholders may change seldom for some time, but the intent may not change. So be very careful because mistakes are made in momentum markets only. So rather than going sector wide where the valuation thing will be there, I'm just talking about because finally everybody invests in stocks as managers invest in stocks. What are the things we should avoid? Uh, and these basics investing back to again. So I think it's the basics of investing and make sure that you don't do the mistakes right.
Okay, great. So you said look for companies that have got good working capital management. Return on capital you should look at. You spoke about operating cash flows being positive. All great things. You also spoke a little bit about, leopards don't change their spots. So I just want to remind everyone or sort of retell a story I think you told me. I hope I'm right. When we did an investor hour many months ago, a year ago, you told me a story. I'd asked you, how do you assess a management? Because that's the most subjective part of our research, right? All others are numbers, but how do you assess the quality of management? And you told me that one way to do it is to measure whether they actually do what they say, right? And then you told me that you actually have handwritten notes going back 20 years where you are actually able to verify stuff. Pankaj, is that do I recollect that right?
Yes, absolutely. I mean, notes are very important in a process. Just go back, say 4 years, 5 years, 6 years. There will be external problems, but have
Mm-hmm.
management lived up to what they have promised? Or the
Mm-hmm.
narratives keeps changing after every 6, 12, 18 months, So I think this thing has a lot of, hard work to do. And
Yep.
over a period of time, you need to assess the integrity of the guys. You need to understand uh, from a return on capital perspective how there is capital allocation. You need to speak to their vendors, suppliers, customers, employees, and do some scuttlebutt out there at the ground level to understand. If the promoter is, shady, few of the guys will talk about him.
Yep.
His lifestyle is too flamboyant. You need to be aware about it. And I
Yep.
personally believe that personal balance sheets and companies' balance sheets are not separated for a long time. If the person is in debt and trouble, it will impact and reflect at some point of time on the company's balance sheet as well. So do all these hard work, and I think that helps you bring some art and science to this subjective element as
All wonderful points. It's like a mini masterclass on how to avoid a bad stock. Okay, let's try and get in some people to ask questions. I'm
Rahul,
doing it.
I've just reached office. I may
Okay,
get disconnected for 2 minutes by the
sure,
time I'm
sure.
in elevator, and I'll immediately
Yeah, okay.
reconnect back.
Yeah, yeah. We are going to engage with Neil till then.
Yes,
Not that
please.
Neil's the backup. Neil, don't feel. I'm sorry if it came out that way. Uh, so,
Happy to help.
Neil, talk to us about. We were having this discussion earlier today on, I think, WhatsApp.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
About this whole fire thing and the importance or the lack of importance, the reality or the lack of reality of it. Tell us what is fire. Tell us how you're seeing it when you're meeting people, when you're writing about it, and also tell us how people look at small cap and mid caps in their goals to achieve this financial independence, early retirement, or whatever it's called.
Sure. So increasingly among millennials and especially among Gen Z, fire has become extremely popular. Like I recently was talking to the first time employees of a company in Bangalore, and the thing that was in finance that got them most interested was retirement. And I asked them, what age do you think you want to retire at? And the first answer I got, believe it or not, was 35. And the second answer I got was 35.
Wow.
And I don't know how they think that they can possibly amass enough wealth to retire at that age, given the fact that a lot of us will be living longer than our parents have lived, and it's tough. I mean, it's tough to generate those kind of returns, build those kind of savings. So today we did the interview with Ashish Shankar of Motilal Oswal, and there he has said that he doesn't really focus on fire because, I mean, on the lighter note, he doesn't want to sit around tweeting about fire after getting in retirement. Um, but I think, I mean, he's highlighting a bigger problem here, that people who do achieve retirement early, they often have a problem of just what to do in life. Um, and it becomes massively boring. My own parents, I think they have struggled with retirement a little bit. I think many of our parents who are in that age, suddenly your work stops, your life, 8 hours, 10 hours a day are spent every day in work. If that goes away, what on earth do you do? So just mindlessly focus on the fire bit, the finance bit, without thinking through the, well, then what do you do with your life bit?
Yep. Yeah, I think the more I think about this on Twitter, at least, I don't know any of the youngsters I hear who are chasing this fire thing till 35. The idea is to, if any one of you wants to sort of speak about it a little, we'll be happy to sort of get you on. I think one thing that is happening is people are lowering the expectations dramatically. They won't buy a house. Some are homeschooling kids, and they're using all kinds of hacks to kind of live a basic life so that they can achieve freedom early, which is fine. Nothing wrong with that. But I think on the income side, a lot of them have got a ton of money riding on the mid cap, micro cap, and small caps. So I don't know how long whether that's going to work out or not. And the other
Fully
thing
agreed, Rahul.
and the
And I
other
think,
thing we,
sorry,
yeah,
go ahead.
please go ahead, please.
So, as you said, a lot of people are extrapolating the kind of returns that mid and small caps have given over the
Yeah,
past 5 years. On an Excel sheet, you can do wonderful gymnastics with them.
that is right.
Um, and the other flaw with the fire thinking is that your things can happen to your health which suddenly upset all your calculations. So,
Hmm.
I had a fracture in
Hmm.
April, and
Hmm.
suddenly it brought home to me the fact that, you know, thankfully my leg is fine now, but had it been something lasting, had it confined me to a wheelchair, what would I have done with a ton of
Hmm.
money? There would have been no choice but to sit at home and watch TV. So might
Yep.
as well spend some money in youth and enjoy it while your body is able to enjoy it.
Hmm. Fair point. And that's also the post-pandemic experience, by the way. And that's why all the travel tourism sectors are, booming, if you will. Okay, we have one request from, I hope I get the name right, Babulal. How do I, Prince, can you help me? Babulal wants to speak. I'm trying to see how to get this done. Do you know how to do this?
I'll do it. And
Yeah.
to all the speakers, will request no company specific question, only questions which are sensible should be asked. Yeah.
Yeah, please, please. Uh, that'll be helpful. Okay, Babulal, you please carry on with your point, and if is there any
Yeah,
question?
on retirement, this is what youngsters are talking about. I am 67 by
Hmm.
now, and I am setting up a new.
You're young.
I am setting up a new project from
Okay.
a greenfield project. This concept itself is against the human brain and against the nature of the human. It is very brave to talk that I will not do this, I will not do this. But when it really comes to doing some 7 days without doing anything, then आसमान के तारे दिख जाते क्या करना है साथ.
Well, fair point. I guess experience. You have experience on your side, so one can't dispute
Number
that.
one, I'll tell you medical problem. If your mind is
Mhm,
not occupied in a creative affair,
mhm, mhm,
Alzheimer comes very near.
mhm,
One of the reason,
mhm,
one of the main reason of Alzheimer is not giving enough work to the brain. I come from pharma,
mhm.
so the
Oh, wow. Okay.
so this talk of retiring at 25, 35, or 45, it is irrelevant. It is waste of talent. The country needs talent badly.
Okay. Point taken.
Yeah. So
Thank you.
as
Yeah.
regarding the investment, Mr. Pankaj told a lot of things which I have followed it in practice after burning not fingers but entire hand, not selecting a right promoter. So for me, I really do good investment in many companies. I have large set of companies, and my experience is ultimately it is a promoter who decides whether you want to become poor or rich.
Fair point. Like Pankaj said, look at the balance sheet of the promoter. Some point in time, it will match the balance sheet of the company.
सब ऐसा है कि
Okay.
जिसकी बीवी को
Yeah.
15 करोड़ का नेकलेस चाहिए वो प्रमोटर अपना खिस्सा खाली
Hmm.
करेगा.
Hmm. Well, fair point. Yeah. Okay. Pankaj, you're back.
Yeah, Rahul, I'm back.
Wonderful. You have anything to say to Mr. Babulal's comments? Did you get that? What he said?
Hello.
Yeah. Okay. Okay. No, I was just saying. Did you hear what Mr.
Yeah, Rahul,
Babulal
I'm
had to
back.
say? Did you get to hear what Mr. Babulal said? Okay. I'm not. Am I audible, Prince? Am I audible?
You are audible to me. I'm not sure Pankaj is able to hear you or not.
Yeah.
Pankaj, am I
Now.
audible to you?
Yeah, now you're audible.
Okay. Super.
Okay.
Super. Okay.
So two small questions, Pankaj. Like there are too many PMSs getting into AMCs, right? Recently, Helios and many more entering this. How you see, like it would be like the space would be expanding or it would be increased competition? I mean, how you see that?
See, my belief is that what India is going through from a overall flow perspective, it's unimaginable, right? And recently, I was attending Ramdevji's presentation at Motilal conference, and he said that over the last 75, 76 years, India has had a savings of about 15, $20 trillion. And in the next 25 years till 2047, India will have a savings of $100 trillion. And just to put numbers in perspective, almost 30% savings rate, $3.5 trillion economy. So we are saving almost as we speak $1 trillion. And a part of it is only going into financial assets. So I think the runway for growth is extremely high. Can you guys hear me?
Yes. Yes.
Hello?
Loud and clear. Pankaj, loud and clear.
Yeah, Pankaj.
You can hear me, right?
Yes.
Okay.
Yes. Yes.
So the runway for growth is extremely high. And I think over a period of time, uh, you would need good advisors, good managers to manage. And I think finally competition has been there for last 15, 20 years. And you have seen competition playing out. The best actually takes the share in terms of market share. So that will continue. But from a runway for growth perspective, I'm pretty sure that the kind of opportunity we are setting down is quite big. Let me give you some data. So if you look at the top 20 large funds of the world, okay, so starting with BlackRock and then Vanguards, the uh, Capitals, the
Fidelity.
State Streets,
Fidelity.
and come to the 20th number. And as per the last data in March, which I saw, it was Fidelity, which had $1.5 trillion in assets under management. And if you look at the total mutual fund industry per se, at say 42 lakh crores, it's roughly about $500 billion. So the total size of the industry is one third the size of the largest 20th AMC in the world. Okay. And many of the top names are still not part present in India, or they were at some point of time and they exited. So I think the opportunity size, when you look at globally what happened to different markets, I think it's quite large. And today, when I look at the way demat accounts have kind of expanded, so 2010 to 20, you had 2 crores demat account, or 4 crore demat. 2 became 4 from 2010 to 20, and that 4 became 12 crores in just a span of 3 years. So more and more people, as the savings rates, as the economy size improves. And what is important is good managers, good advisors, and the entire ecosystem, I think, will be vibrant. So I'm not very worried on the long runway for growth. What you need to do is whatever business you are in part of this asset management, whether it be managing, whether it be advising, do it with a lot of trust, because money is finally goes to people who are trustworthy. And don't take shortcuts, don't compromise your integrity. And I think if you can do those basic things, 1 or 2% return here and there won't matter, but the opportunity size over a period of time is very large, so you will get your share.
It's very well said. uh,
Prince.
so if this money flow continues to come in, Pankaj, and you mentioned about,
Let me confirm from Pankaj. Pankaj, Rahul is audible to you, or is he not?
No, no, Rahul is not audible.
Rahul.
oops,
So you can
okay.
ask the question. I'll pass it on. Maybe that way.
No, you ask a question. I'll try and figure out. I'll probably
No,
log
no,
out
sir.
and
If
log in
you
again.
are the host, if you log out, then the spaces will get turned off. So that would be
Okay.
trouble. Maybe
Okay, no,
maybe
that'll be trouble. Okay,
Pankaj
so
can
the question.
try dropping once and rejoining again. Maybe that can help.
Okay, I'll do that. I'll do that.
Vijay, Vijay Bambani is on the spaces, and I'm wondering if he'd like to speak. Vijay, I sent you a speaker invite. If you are comfortable speaking, accept it, please. I'd love to get your view on the markets. I think there are very few people who are as experienced as you are when it comes to trading.
In the meantime, Rahul, if I might just point out, I've
Yes,
posted a link to our story on small cap funds in the replies to this spaces. So, when anybody's interested, please do go and read it. We've made
super. Yeah.
certain arguments that we've analyzed some data about small cap funds. So, do have a look.
Yeah, I think.
Rahul, you can try speaking, and maybe we can ask Pankaj then whether you are.
Yeah, thanks. Yeah, Pankaj, are you able to hear me now?
Absolutely loud and clear, Rahul.
All right, super. Thanks. So, Pankaj, you mentioned about how money is pouring into India in the last few months, and you also said there is a long runway, and of course, in this runway there'll be ups and downs. But the question is, what are the chances that the flows could be so large over a period of time that the reality and fact may be totally disjointed when it comes to valuations and stock prices? I think it's happened in some markets in the past, but what's your thought on that? Is that something that you worry about, that you will step back and for the next 2 years money will keep pouring in and prices will go out, or you're happy to underperform for a longish period of time if this money flow idea actually plays through?
Yeah, I think you have touched upon the right point, Rahul. And I think that's what has played over the last 4 or 5 months. Fundamentally, if you look at things have been better, but not to the extent. And every negative news has been ignored by the markets as we speak. Look at the way crude has rallied from 75 to $90. Market is really not, worried about that. Monsoons, 122 years, always been a bad spell. Market's not worried about it. Uh, 10% below average monsoons, market is not worried about it because the liquidity flow has been very strong. And obviously that's a point to worry that, and I always believe that I have the reserve or we have the right to reserve to go wrong. And There's a very important saying that markets can stay irrational till you remain solvent. So you need to be aware of the reality, and the flow part is an important part. And A large part we have benefited in the last 6 months because of China, and especially from a FI flow perspective, that a lot of money which used to go to China probably has seen some stoppage, and that part is looking towards India. So we have benefited from the flow to China, and we cannot ignore that part. And can that be a slightly longer term? Could be. But I think supply will see itself managing out. I think over the last 5 months, 150,000 crores worth of new supply has found its way into the market, either selling by PE guys, venture capital guys, or the promoters themselves and the new IPOs. So I think markets will kind of find its level from new supply perspective, and we need some large, new, good quality supplies as well. Otherwise, flows can chase stocks and exuberance can continue for a long. I always worry about that part. And we
Yeah.
need to be careful that markets can stay irrational till you remain solvent.
Incidentally, Incidentally, I've been posting that line for a couple of weeks on my Twitter handle, and not a single person is liking it.
Yeah, yeah, yeah.
The sign of times. So you mentioned a point about portfolio construction. Now, I've devoted my post equity master few months to
Yes.
only talking about asset allocation and portfolio construction. And I don't think it's making any impact these days because any idea which is different from a small cap, mid cap, just doesn't appeal to anyone, right? But I'll still ask the question that as analysts or as people who've studied stocks, one thing that is very apparent in this market is, and in the data you shared, there's a divergence in valuations of large caps and the small, mid, micro caps, right? And so, and this also kind of solves the problem that if interest in the large caps grow over time, they can absorb a lot more capital without moving the price than the small, mid, micro cap stocks. So, my question to you is, should the listeners today be actively looking at large caps primarily because there is a lot more value available there today, or do you see that there is a issue and one has no other choice but to try the hand in the other segments of the market?
Uh, Rahul, I don't think there's a single answer for this. Okay.
Mhm.
What I would suggest is that large caps definitely at this stage have a higher margin of safety. And I'm saying this being a practitioner in this space for last 2 decades in mid and small caps, right? But having said that, I think one needs to reevaluate, every individual needs to reevaluate their portfolio and ask the question, and they should know themselves well. So KYS is more important than KYC right now, right? Know yourself is more important. That are you overexposed to the mid market or small cap or the nano cap or the micro cap segment? Uh, and what's your temperament to see and weather the drawdowns? I think this will differ from individuals to individuals. Uh, but what is important is to just reassess the asset allocation which you have in your equity portfolio at the moment, making sure that if you are sitting on any, lower quality names, you get rid of that now. Uh, Otherwise, money will stay in paper only, and we have seen in previous cycles. So I think this is the time to reassess the portfolio 360-degree and probably take a call there. But there can't be one fit answer for anybody. I have seen people who have been able to weather the cycles across and exposed at a very high level of mid and small caps. They have made their fortunes from there. So nothing wrong that. Uh, but many people I have seen uh, joined the bandwagon because of the social pressure. And with a 20% drawdown, they got nervous and they got out the moment it became par. So each individual will have its own temperament, and I think it's very important to know yourself right now rather than just blindly following the market.
So
Margin of
Pankaj,
safety is the magic three words that if people understand that, they're set for a much better life as investors. In fact, I will just quote something quickly, Prince. Just sorry, 1 second. I've been reading this book. What I learned about investing from Darwin is Pulak Prasad's book. I'm one third, into it, and it's a wonderful, wonderful book. And he writes, he quotes a line from I think, an intelligent investor. He says, confronted with a like challenge to distill the secret of sound investment into three words. So I'm repeating, distill the secret of sound investment into three words. We venture the motto, margin of safety in full caps. That's the secret. If we get this right, we are set for better times. Sorry, I just wanted to say that. Prince, you were asking something.
so Pankaj, like these days, the government is focusing more on Jan Aushadhi. So their focus is more on generic medicine. So how much impact you see on the industry in lines of like government's focus on Jan Aushadhi?
Prince, I may not be the right person to answer this question in all humility.
Oh, sure, sir. So, Neil, anything
Yeah.
on your part? You have any questions to Pankaj, or maybe we have two speaker requests also. Meanwhile, I'll approve. Neil, Rahul, over to you.
Sure. I'll just ask one question, Pankaj. So the standard answer that, or the statement that people make is that, yes, I can stay put for 10, 15 years. So what's the problem? Even if small caps correct in the next 2 to 3 years, is that a good position to take? That if you are willing to stay 10, 15 years, then small caps will outperform large caps?
Uh, Neil, I kept hearing this part from every investor, and my experience, and this can differ, please kind of ignore that, is that 99% of investors say they are long term, but every evening they want to see their entire portfolio, what the value is. And forget about every evening. Many investors I have seen that this paisa is for my daughter's marriage. I won't touch it for the next 20 years. But after 1 month, 15 days, when markets correct by 15%, they get nervous and and they start asking questions. So I think by thought process, there is a short-term orientation which is there, and people want to make quick buck. So it looks very nice, well, the time of investment. But the moment you make your investment, you start tracking the stock or your fund. Moment, I am telling you, and a large part is into that. So I think as portfolio manager, we need to be cognizant of that fact that long term is essential, but you cannot ignore the short term. The reason we are having this spaces is that tomorrow people should not mock that these mutual fund managers don't want. These mutual fund managers just, kind of come after the postmortem. My job, our job is to come and say, we may go wrong in our call, and and full, humility. I have told about previous cycles where it was a lag of 5, 6 months. Market kept on moving up. People mocked at us. But finally, the excesses which we were seeing, we were kind of awareing them. So markets in the long term will reward only who also care for short to medium term, because the long term is made of short terms. And if you navigate short term properly, in the long term, you will make returns. And I am fully convinced that this space has lots of opportunity in India. The kind of entrepreneurs, promoters, if you can find right, the businesses which are there, the scale which these businesses are achieving, and many of you may not, you're aware. We did this study that we analyzed top 600 companies of India in market capitalization, and generally mid and small cap means choti company, chota size. But you'll be surprised to know that if you remove the top 100 companies of India, the rest universe of 500 odd companies, 220 companies were leaders in the sector they were operating in. Uh, Tile company, for example, whether it be a plywood company, whether it be auto ancillary, whether it be, uh, you know, a chemical company or a fertilizer company. The name suggests mid and small cap, but they have achieved size and scale and they're leaders in the business they operate in. So my belief is that if one has the right temperament, if one can weather the drawdowns which will happen periodically over periods of time, stay with good quality companies, good quality managers who have avoided downfalls or less fall during drawdowns, you are set for a wealth creation from a medium to long term perspective. But risk need to be managed. Don't ignore portfolio construction. Again and again, I am saying we all are getting obsessed by stock picking, but finally, portfolio construction will make and asset allocation will decide the wealth creation over a decade, is my belief.
Super point. Okay, let's go through some questions, Prince, quickly. I think we
Uh,
are
Rahul, I have
taking some
5 minutes more.
Yeah,
If I can
okay,
be,
done.
if I can.
Done. Five. We'll wrap it up in five.
Yes.
Uh, Prince, let's rush through one or two those guys, please. Is Prince there? He's dropped off. Prince is there. Okay, Gordon Gecko is here from Wall Street. Gordon, you want to ask a question quickly, please? Okay, Gordon's not. This is not working out well. Uh, okay,
You can
so
go with any. Yeah.
so I don't know. I don't think this question thing is working this time around. We'll probably do it next time and try and manage it better, if you will. But Pankaj, without taking much of your time, tell us, you know, your like 4 or 5 points everyone, all the 600 odd people should keep in mind when they navigate managing their portfolios from here on.
Number one, uh, companies with stressed working capital cycle, ignore.
Okay,
They can be.
if I may, sorry, Pankaj, once again, guys, please note this down because tomorrow morning or tonight, when you turn on the TV, there are going to be a whole bunch of people egging you on to ride the bull market. So you don't want to forget that. So please note this down. I make notes when I talk to Pankaj because it's a masterclass. Sorry for the interruption, Pankaj. Back to you.
No, so I'm just saying that be aware of the working capital cycle of the companies you're investing in. Companies generally with 140, 150, 160 days of working capital are typically not great investments. That's our experience. Uh, Second is that it's difficult to make money in companies with very high debt and leverage. So please look at balance sheets very carefully and make sure you are not riding on companies with very high leverage. Uh, Third is that growth more than the return on capital is not sustainable for a longer period of time, which means that you need to be aware that your return on capital is sufficient enough to fund your growth. Otherwise, if there's a difference, you will need to dilute equity or borrow debt. And ROEs higher than cost of equity is extremely important to create sustainable wealth over longer periods of time. Uh, Last but not the least, promoter quality, management quality, and growth is extremely important. Uh, you may have slightly lower growth companies with higher return on capital. That's something which is very, very important to understand. Don't compromise on quality at all. At this stage, it's very natural to get carried away by momentum and invest in lower quality companies. Please don't lower your quality anchoring right now. And last but not the least, keep reviewing on a risk management perspective your portfolios, your managers, and making sure that you don't make big mistakes. Mistakes will be done. We make, all the time we make mistakes. But if out of 10 calls, three goes wrong, it's fine. and mistakes should not be large enough to hurt your portfolio during a bear market. So keep these things in mind and quality anchoring, and I think you should be good enough to navigate the turbulence which will happen from time to time in markets.
Well, thank you very much, Pankaj, for doing this with us. It was my first Spaces, and it was
Thank you.
wonderful. Thank you very much.
Thank you. It's a
To
pleasure,
all
Rahul.
the listeners, please do send us your feedback. We've already, I think next week we'll be doing a discussion with Devina Mehra of First Global. She's a wonderful speaker and covers behavioral investing, quant investing, and all that. So please look forward to that as well. Meanwhile, if you want to, follow our accounts just to be sure you don't miss anything, it's your call. You can do that. And Neil, thank you very much for taking out time. We're going to do a dedicated session with you, only talking finfluencers.
Oh
since
boy. Exclusive,
since you are
explosive topic.
explosive topic. With that, thank you all, everyone. Have a great evening,
Thank
and
you.
see you soon.